Welcome to 7 Investing Now, a show that teaches you how to take a long-term view on investing by better understanding what's happening in the market now.
Good afternoon, 7 investors, and welcome to the Wednesday edition of 7 Investing Now. My name, of course, is Daniel Brooks Klein. I'm being joined today by Steve Simonton. Our very own woman behind the glass, Sam Bailey, is a little bit under the weather, so JT Street is sitting in. So if we have any weird technical glitches, JT is taking this on at the last minute. Steve, have you slept at all? It feels like there's one company after another reporting earnings. It's absolutely been exhausting.
Yeah, I had dreams about earnings last night. That's kind of how these couple weeks go. But hey, every 3 months, it's just a lot of new homework. So keeps us on our toes, right?
Yeah. So let me give a little bit of context here. We're going to talk Apple, Microsoft, Starbucks, and Anirban Mahante is going to join us to talk about Tesla earnings. But I want to give a little perspectives on earnings as a long-term investor. And Steve, I'll let you weigh in here as well. I think it's important to remember that earnings are guideposts along a longer journey. So you might learn that you're lost. That could be bad, but you're probably going to learn just where you are in the trip. So as a company, each quarter reports, they tell you information that you check against your thesis. Hey, Apple said it wants to grow its service revenues. Has it been doing that? The answer is resoundingly yes. Steve, your overview thoughts on earnings, and then we will get into Apple.
Yeah, exactly what you said. I mean, one quarter does not a great company make, right? And that's kind of the thesis, it's thesis validating information that you can collect and make sure they're on course. And that's part of what's really important about investing is knowing what you own and knowing whether the companies that you own are staying on course relative to what you expected them to do or better. So just look at these as snapshots of the longer term stories. That's how we view them.
So we would love your questions. We would love your comments. If you want to say hello, that would be great. If you want to ask us about earnings of companies we're not talking about, if they're ones we've looked at, maybe we'll try to get to it towards the end of the show. But this is usually an interactive programming, but these earnings shows tend to not be as much. But we would love for you to be a part of the program. But let's get right into it. Apple, the previous 2 quarters, had 2 of the best quarters I had ever seen for earnings. You're looking at the numbers and you're like, is this just like a placeholder? Are these made up numbers? They're so good. But I wanted to share something. So I often use CNBC, CNN, Bloomberg as sort of where I'm, finding this data rather than reading the press release. They often distill it down faster. And CNBC used the word demolish when it described Apple's earnings. Steve, these numbers were good. Why don't you give us a little bit of an overview?
Yeah, good. Good seems a massive understatement. I mean, this was the company's biggest Q2, at least calendar Q2 in company history, despite the pandemic, despite supply chain concerns that technically hampered their growth. They were really exceptional. Revenue was up 36% year over year. I mean, looking at the headline numbers to 81.4 billion, they turned in earnings of 21.7 billion with a B, $1.30 per share. They both beat estimates pretty handily. I think analysts were expecting like $1.02 or something. And
Steve, let me jump in here.
Just strong.
You say despite the pandemic, but is it partly because of the pandemic? Like we needed new computers, we needed new phones. Here, go ahead.
Yeah, there was that, and it's sort of kind of one of those things where it's one of those businesses that just really isn't affected, and it's arguably spurred by the pandemic and people saying, all right, we need new phones. We have this kind of massive upgrade cycle that's hitting. You have 5G technology and people kind of rolling over that way. So yes, when you look at they're sort of firing on all cylinders, even though they're hampered by supply chain challenges and chip shortages. So you saw every one of their major product lines climb at least 12%. iPhone sales were up almost 50%. On an annual basis. I think they represented 39.6 billion in revenue. That was a little less than half their sales.
That's the number, and I want to jump in. The reason I think this number is astounding is because we are right now in August, and traditionally September, maybe October this year is when the new iPhone comes out. So historically, this is actually the weakest quarter. Steve, why are people buying iPhones when the new one's going to come out? And we're going to buy the new one, or at least I'm going to buy the new one.
Yeah, and part of it's just, it's time. people aren't really necessarily looking forward, and maybe they're distracted enough to know that well, I don't really need to wait. There's good deals, and they're kind of being spurred by some of these carrier deals, and as they move forward and look to the new releases, they're trying to move this inventory, and there's a lot of factors at play here, but it's just it'll be really interesting to see how they go forward, because they again decided not to provide forward guidance. I think that's the sixth quarter in a row since the pandemic started that they haven't done that, because they say, you know what, we're not going to try and guess where this was. And when you look at it sort of makes sense. You look at what the market was expecting. I think they were looking for something like 22% top line growth, and it ended up coming in at 30 plus. And it sort of illustrates the futility of trying to estimate how things are going to go, given the global, the macroeconomic picture and supply chain challenges and demand. And there's a lot of stuff at play here, and you can't blame them for not offering forward guidance. But they have made a habit of under promising not even no promising.
Yeah,
and
no promising,
right? So it's pretty incredible what they've achieved here.
So I think this is actually the first quarter it 100% makes sense to not give a guidance, because here's the reality. We're in August in a couple of days.
Yeah.
The difference between the new iPhone coming out, say, September 25th and October 16th, my birthday, be a great day for it to come out, Apple. Those are really big differences. And what the availability is, usually when the iPhone comes out, it's sort of like a rolling availability. You register with your smartphone provider. They tell you it's going to come a month and a half later. It usually comes 5 or 6 days later. They don't know when those sales are going to get booked. They also don't know how aggressive the various carriers are going to be about blowing out inventory of older units and what deals they're going to be offering. So The next quarter could be the best iPhone quarter ever, or 2 quarters from now could be the best iPhone quarter ever. And I don't think we know. Rahul, we see your question. We would love your questions and comments. We're going to take them between the segments. That's a really good one. Steve, the number that impressed me most here was the service revenue. That was up 33%. I bring that up because that's a number that I just didn't expect. Like, look, I am an Apple multi-subscription person, but I'm not entirely sure why. I use music, and like once every 2 months, I remember to read like an Entertainment Weekly article. I have Apple Arcade. I've never played a game for more than 3 minutes on it. So this number astounds me, but it's really key to the future of the company, right?
Yeah, and I mean, services it's sort of, I won't say low-hanging fruit, but something enabled by the network effects of the Apple ecosystem and developers stepping on board and more people using it. And it's not terribly surprising when you see, overall revenue and iPhone revenue in particular up 50%, to see services revenue climbing by a third in the process. And it's high margin revenue. So it's very lucrative for them. And what was it, 17.5 billion or so is what it ended up coming in at. So, pretty impressive. And you always love, as someone who analyzes these businesses and their margin profiles, to see services lines and software and subscriptions climbing, because it generally tends to be high margin, pretty lucrative revenue streams.
That actually segs very nicely into where I wanted to go next, and that's subscribers. Apple now claims 700 million subscribers. That's up 150 million. A bit of a caveat here. This is not just people who say sign up for Apple Music or an Apple TV subscription. This includes if you sign up for, say, Netflix through Apple and Apple gets its cut. But Steve, 700 million people, however you count those subscriptions, that's a ridiculous amount of revenue and an incredible hold over your customers. Yeah.
I mean, when you consider there's that's like 11th of the global population. What is it? 7.8 billion, 7.7 billion people on the planet. So yeah, that's an incredible number, however you slice it.
Apple closed the quarter with 194 billion in cash on hand. That is an astounding number, and I don't think they're about to buy anything big. So that is really a number that just gives them all sorts of versatility. But Steve, I wanted to close this out with what's kind of the elephant in the room for not all of the stocks we're talking about today, but some of them. Apple put up these huge numbers, and then the stock went down. That basically tells me that in the short term, what a stock does means absolutely nothing. What are your thoughts on the price drop here?
I mean, I guess you consider the fact that shares are up 12% year to date. What were they up like 6% in the last month or something like that? So a good portion of the year to date gains. We're also talking about a $2.5 trillion company. And of course, yes, a $2.5 trillion company that has over 190 billion in cash on its balance sheet. That's larger than a significant chunk of the S&P 500's market caps anyway. But, for huge companies like this, unless, this was a blowout quarter, but you do have some concerns about supply constraints kind of tempering expectations going forward. They could outperform regardless because, they do have some preferential treatment from suppliers who want to maintain good relationships with Apple. So it's hard to tell exactly where they're going to go. This is a very strong business that, if anything, is hampered by factors outside of its control. So that should be encouraging for Apple shareholders. To see shares down 1.5% today, just shrug and move on and realize your thesis remains intact.
And they actually fell by more than that each of the past 2 quarters. And that's basically because Apple's willing to say, hey, there's some uncertainty about supply chain. There's some uncertainty about China. We're going to move into Microsoft in a second. Before we do that, I want to take Rahul Gaudi's comment. If you could share that, JT, I'm hoping you know how to do that. And he does. With the heat of antitrust on big tech, would we see any M&A in the short to medium term? I'll go first here, Steve, because you're going to have to talk a lot about Microsoft next. So I don't think, and JT, you can put the question down. I don't think we are going to see any gigantic deals. I don't think you're going to see like Apple buy Teladoc or like something crazy like that. Apple is going to continue to buy these little 20 and 30 person companies that do some ridiculous thing. Like it makes the button 2% more efficient on this app, and they're going to kill whatever app they have and just roll that technology in. I think you're going to see that. I think Microsoft has a bit of a green light to buy stuff compared to some of these other players. But I don't think we're going to see the biggest players make any really gigantic deals aside from the ones that Microsoft already has going on. Your thoughts here, Steve?
I think we'll see some try, but there will be, I think the deal making attempts will continue behind the scenes because there is definitely an interest in M&A activity, especially in the first half of the year. We saw some major deals unveiled and immediately opposed. And I think you're going to see perhaps some delays in the development of these deals potentially until we have more clarity on antitrust regulation and kind of the pushback from that at this stage, because they're in a lot of media, government circles, I guess you could say, they're sort of, the big tech is being painted as this enemy, and growing larger and even more powerful through M&A is obviously not something that a lot of government regulators are going to allow. So they're going to need to make a pretty compelling case that whatever M&A activity they have doesn't represent an even greater threat to monopolistic or dualistic power.
Great question, Rahul. And you're going to see us mention China in a number of cases here. So if you have questions related to what's going on in China, feel free to ask that wherever you're watching. In theory, if you comment in the chat, it will show up. I say in theory because it's not always in practice. Sometimes I see comments on things that didn't make it through to the live. We're going to talk about Microsoft in about 20 seconds. Before we do that, I just wanted to share one thing. Some of you may not know, but every day at 4 o'clock, we are doing what we're calling, on Monday through Thursday, not on Fridays, we're doing what we're calling the 7 Investing Market Focus Spaces. Steve, you want to give a quick explanation of what that is while I drink some water before I cough again on air?
Sure. We're spending some time on Twitter Spaces and going live and just talking about some of the biggest news of the day with a long-term slant, of course. But we want to kind of talk about what happened, just a brief kind of 15-minute overview with a couple of our lead advisors. And later today, it'll be Max and I that step out and kind of talk about sort of what happened today, but also through a lens of, is this really important to a long-term thesis? In many cases, it may not be, but it might just be looking at the current state of the market and kind of the action, So, are we looking at this kind of duality between, the pullback in big tech, but despite massive earnings, and then you sort of see these underperforming small caps. Are we going to see rotations? Is the market overvalued? Do we care about the latest pushes in wealth tax from Elizabeth Warren coming out today? Anyway, we'll talk about it.
So let me simplify. We're going to take one topic every day, one very focused topic, and we're going to give you the long-term investing angle. So, we talked about what's going on in China. We talked yesterday about just one of the reasons, like how COVID was impacting the market. This is going to be a very focused show. It's going to be loose. It's going to be fun. It's on Spaces, so you don't have to dress up. We don't have to dress up. It's just audio. You can find that at 7 Investing. But Steve, let's move into Microsoft earnings. Wow.
All right.
Net income up 47% year over year to $16.5 billion. Revenue 21%, $46.15 billion. Why don't you give us the overview? These numbers look great, I have to say.
That's big numbers. And actually, it's interesting to watch Microsoft go from red to green ever so slightly on the heels of that report. It's sort of hard to deny this incredible growth at scale, with a couple exceptions, and we'll kind of get to those. But yeah, net income up 47% year over year to $16.5 billion with a B. That's a lot of money to make in 3 months. Follow the bottom line. Revenue was up like 21% year over year to 46 change billion. It's slightly accelerated actually from last quarter. I think revenue was up around 19%, and really again handily beat estimates. The intelligent cloud segment, encouraging. Again, this is sort of a high margin, very lucrative, big opportunity for them. It includes Azure, which competes with AWS, Amazon Web Services, Windows Server, SQL Server, GitHub, which they acquired, I think, in 2018. But the intelligent cloud segment saw revenue climb 30% year over year to $17.38 billion. That's really interesting because that's a little over a third of their total revenue. So Azure, which they don't specifically announce actual revenue numbers for Azure, but it was up 51%. So really encouraging. Again, you look further down, productivity and business processes segment that includes Office 365. It includes LinkedIn. That was up 25%. Office 365, their kind of cloud productivity suite, was up 17%. LinkedIn was up 46% because of marketing services. Pretty impressive there. Advertising opportunities. Also, I'll be very interested to see how the strength in digital advertising kind of trickles down to some of these smaller players in the market, because we've seen some pretty impressive advertising numbers from the bigger players. But what about your Magnites and your Trade Desks and your Roku's, companies like that? Teams reached 250 million users. That's their kind of chat messaging. Teams is a really interesting platform, but again, a lot of scale. And Microsoft is sort of funny because they're just sneakily doing this, like growing at scale. And people are like, oh, like these are multi-billion-dollar businesses within a trillion-dollar, $2 trillion business. And wow, how impressive.
Yeah, let me jump in here, Steve. Microsoft is my biggest holding. That is a function of when I worked for Microsoft, I was enamored with the company and bought a bunch, and I have since held on to it because I happened to work there during Windows 8, which was a very down period for the company. So it was a good time to buy its stock. That being said, I would actually argue that Microsoft is like, and it always has been, this company nobody has any passion about. Like nobody's like, oh my God, I just got the new Windows device. But it's so ubiquitous, you have to use it. I don't think anyone seeks out Teams. I think a lot of companies are just on a Microsoft platform, and for security reasons, for not having to port everybody over, they're not using Zoom, even though probably many of their departments and intergroups are rogue using Zoom in ways. So I just think Microsoft is the monolith, and we talk about this as sort of investors, and people ask us, well, these companies keep growing by double digits. Can they, continue to grow at these numbers? And I'd like your opinion, but I would argue yes, because I think we're largely becoming a winners and niche players world. You mentioned advertising. The vast majority of advertising, and I'm not talking about your Magnites and your Trade Desk, because those are sort of back-end functionalities, but I think the vast majority are going to go to your biggest players, and maybe Roku's included on that list. But when you start to get down to like the 7th rated social media site, you're going to have to be really, really targeted. So sure, if you're Pinterest and you have really targeted, it's going to work. But for the most part, not always going to work for smaller players. And we would love your thoughts and comments. You've been quiet out there, Seven Investing Nation. Steve, your thoughts. Can the big keep getting bigger?
Yeah, they can, and that's not to say, Microsoft case, not everything was perfectly strong. Actually, we saw revenue from device makers for Windows licenses fell 3% this quarter. So that was license revenue associated from consumer PCs decelerated to, I think it was a drop of 4% from 44% growth in the prior quarter. But again, sort of like the Apple case, not necessarily something that was in their control. This was in part due to supply constraints at partners like Dell and HP that they kind of flagged in recent months. And so we also saw sales of Microsoft branded Surface PCs fell 20%. So it was one of those things where they supply constraints are affecting people on a broad basis, affecting companies, which aren't people, on a broad basis. And, so we also saw Xbox sales, it's sort of one of those, Microsoft owns Xbox content and services fell 4%, but that was also against a difficult comparable.
And supply chain. It's very difficult to get an Xbox right now. There's also very few games in the pipeline, which has been a problem since the new Xbox came out.
Mm-hmm. Yeah. And again, difficult compare because they were up, 65% in the same year ago period. And we were kind of at the height of the pandemic. And it's interesting to see because these big kind of monoliths and these big dominant industry players, your Apples and your Microsofts, they're growing at scale. But where there's hardware and supply chain stuff involved, they're kind of struggling there, and at a certain point it becomes tough to actually fulfill demand, just simply because of a combination of supply constraints and other variables as we sort of try and reopen things and ramp production again. It's not as easy as just pushing a button, right? There's a lot of links in this chain that need to kind of come together for everything to work properly. And it's kind of interesting to watch how the world is built in that sense, and how smoothly everything was going before the shutdown. Kind of took that for granted, didn't we?
Yeah, and I would actually say we can actually throw out traditional patterns. So traditionally, school year starts, people buy computers, they stock up. This is actually expected to be the biggest back to school ever. We're actually in back to school here in Florida. My son starts something like August 10th. That being said, an awful lot of people bought new laptops, bought new tablets last year. They may not make that investment again. So we're going to see weird cyclicality that doesn't work the way it has traditionally worked in the past. I want to close out with a comment here. And Steve, I have no idea how to pronounce the name. There's way too many consonants in this one. So I will leave it to readers to read it. But if you want to put that comment up, JT, it would be great. We'd appreciate it.
Well,
where do you see
making pie?
Okay. I had an R instead of an A there, so I would have failed on the reading test there. Where do you see Microsoft going in terms of gaming in the future, especially with the Game Pass? Steve, I have the Game Pass. I love the Game Pass. It gives my son access to a couple hundred games, mostly pretty new games, a whole lot of EA games. I think this is the future, that gaming is going to look like Netflix, with the exception of maybe some of the biggest releases, because I'd much rather spend, I think I spend $30 a month for my hardware and the Game Pass. I'd much rather do that than spend $70 for a new game. I'm only going to be willing to do that for the absolute best games. Where do you think the future of Microsoft and gaming is going, Steve?
It's funny that you say, Netflix or gaming is going to look like Netflix, because, Netflix is also diving into its own gaming service. So,
oh boy, that is going to be a disaster. That is a terrible idea.
I want to disagree, but I'm not sure I can just yet. We'll see. I don't think it's going to be like Quickster, right, when we're going back to Netflix. But I'm kind of excited to see what Netflix can accomplish in that sense. But as far as Microsoft, where they're going in terms of gaming with Game Pass, they've talked about how their Xbox Series X hardware is actually driving adoption of Game Pass. I mean, we're talking about a $15 a month service. And a lot of time, when you think about the cost of buying a single new game outright, it's pretty attractive. And yes, I think it'll look a lot more like Netflix, and Microsoft is doing a lot of work to upgrade their data centers with the latest Xbox hardware to improve frame rates, to improve the gaming experience, especially for game streaming. And I think that's, of course, the way things are going, especially with increased bandwidth. So really looking forward to seeing where they're going there. And again, it's going to be one of those things where, yes, you have some upfront investments. Of course, they can do that with their deep pockets in the hardware and maintaining data centers and such to actually let this happen. But as bandwidth increases, it's going to be pretty fun from a gamer's perspective to watch this unfold.
Microsoft only owns top-tier gaming franchises like Halo and Minecraft. Netflix has a long history of throwing 100 things against the wall and then telling you they were successful because some algorithm said people watch the floor is lava. Here's the reality. Do you like the Microsoft model and the Disney model, or do you like the Netflix we waste billions on content model? I don't trust them going into games. Now, if they said, we are partnering with one company and we're building a really cool Stranger Things, interactive game, or an Orange is the New Black Escape from Prison game. I'm not sure what that would look like, or a Bright game where you could beat up orcs. That I might like. It's very focused. I'm not sure this whole mobile idea. We're going to talk Starbucks in a minute, but I wanted to get to a couple more comments here. Andrew H., who I think might be our very own Andrew Holder, but I might be wrong. He says, Azure market share trending up. Do you foresee them catching up to AWS as more Microsoft enterprise customers convert from on-premises to cloud? I am pretty sure that would be like saying, can Pepsi catch up to Coke? I'm not sure catch up is possible, but growth is possible, right, Steve?
Yeah, I mean, they're growing quickly, and part of it's growing at scale, and it's hard because Microsoft doesn't release specific numbers for Azure just yet. But I know last I checked, I think it was something like AWS was up 32%, and Azure is growing faster, yes. But I think also from a much smaller base. So it's kind of tough to tell in these stages. And, I think I'm not sure I would compare it yet to like Coke versus Pepsi, just because of the scale and sort of this duopoly that they've had. But
I think you're forgetting IBM's cloud. No, just.
Yeah. So, how sad. But good old IBM. It remains to be seen. I mean, I think I have more faith that AWS can continue growing at scale than I do Microsoft's Azure growing at the same scale. But I think there's room for multiple winners. It's a massive, massive, massive market. So I don't think we need to be too worried about them not being able to sustain growth going forward.
To quote Tommy Stinson in a Bash and Pop song, there is room enough for two. In this case, I think there is more than enough room. There are also enough people that just simply don't want to give their information to Amazon. And Microsoft just has this incredible user base, and that all comes from Windows and Office. And I think we are farther away from there being a Windows challenger than we are closer to one. Couple of great comments from Daniel Delgado, but we're going to take them after. Sorry about that, JT. I teased it there, but we're not going to take it. We are going to take them after I talk Starbucks and Anirban Mahante talks Tesla. We'll close out the show with them because I think they're relevant to Tesla. I'm going to go pretty fast on Starbucks here. Steve, are you a Starbucks customer? How far do you live from a Starbucks there in Montana?
7 minutes. Yes, we always hit it. My daughters even, it's funny how they target I've got a 13-year-old who's every time, coming back from swim practice every day. Can we hit Starbucks? Can we go to Starbucks? Can we go to Starbucks? And yeah,
it's significantly part of my routine as well. I have not had my coffee this morning because I'm actually going to sort of be in the background. I don't want to say calling it producing. I'm going to press play on the Spaces later at 4:00, and I'm going to be driving. So I'm going to find a Starbucks to do that from, just in case I don't have a great T-Mobile signal out in fairly rural Central Florida. There's basically nothing once you get past Jupiter for the next 2 hours until you get to Orlando. So there's a lot of questionable signals. But here are the Starbucks numbers. Net sales up 78% to $1.5 billion. That's a bit weighted because we are year over year competing with a pandemic quarter where, while Starbucks never completely crashed, they did have some challenges during the beginning of the pandemic. Their fiscal third quarter net income, $1.15 billion, 97 cents per shares. That's up from a loss of 678. So they have turned around the pandemic. That is very important. In the US, that's Starbucks' largest market, same-store sales were up 83%. Again, they're up 83% over stores that were closed or drive-through only, or in some cases, simply couldn't operate. Here's the interesting number. Nearly 3/4 of the company's drink sales came from cold beverages. Why is that important? Cold beverages are on average more expensive. They are generally just better for the company. Outside of the US, same-store sales were up 41%, fueled by 55% growth in customer traffic. China, the second biggest market, had same-store sale growth of 19%. A year ago, that had been down 19%. So what does all of this show us? It shows us that Starbucks has recovered from the pandemic. They are forecasting some possible weakness in China in the next quarter. Is that something to worry about? It really isn't. Here's the interesting thing Starbucks said. And Steve, I'll give you a couple of seconds to put together some questions, or if there's something you want to ask me. I think what was most interesting, and Starbucks, over 50% of its orders came from digital, and that gives the company a lot of ability to sort of tweak you into ordering what it wants. So we've seen coffee prices have risen about 60%. Starbucks has actually locked in its coffee prices for the next 14 months. So I would assume that's not at 60% higher. It's probably at higher than we were paying. But their CFO came out and said, hey, look, we have the ability to encourage our customers to add an espresso shot or to go to a bigger size or to add food. So that digital connection to me is incredibly important. And I'm really not worried about price volatility. I think this is a company on a steady march uphill. Their deal with Nestle has been done incredibly well. They've expanded that to more countries. If you go to a grocery store or convenience store, you see new Starbucks products. I buy them all. I'm a sucker for this. So Steve, I am very encouraged by the Starbucks numbers. We won't belabor this. We'd like your questions or comments. And Steve, I'll give you a chance. Is there something you'd like me to answer about the Starbucks numbers?
Yeah, I was encouraged too. I mean, I guess the biggest variables I had going in is, okay, what's its relationship in China looking like? And prices of coffee beans, right? The Brazilian coffee I'd seen going in there. Going into the report, I was like, I mentioned this actually in one of my advisor updates. I'm like, what was their, what are their supply agreements? What does their cost management look like? And I mean, the fact that we actually exceeded pre-pandemic sales in this case overall is really, really encouraging. And, the mention that they'd locked in their coffee prices for the next year plus, pretty awesome and fantastic business management, controlling what they can control. Again, in this case. So it's what a business.
And I'll jump in and say, in addition to having this huge buying power and the ability to, much like airlines do, or even cruise lines in terms of locking in fuel prices and sort of hedging somewhere in the middle, Starbucks has, I don't want to say unlimited pricing power, because maybe at like $9.99 for a cappuccino, you're going to balk. But I have no idea if the two Starbucks I go to, or the three really, because there's one in the Target near, I have no idea if they have different prices. They very well might. I know that when I go to Las Vegas, prices are higher, but I don't know if they're 50% higher or 25% higher. I could not tell you what the price of the iced decaf Americano with cold foam I get most days, or the green tea I get many afternoons. I don't know what it is. So if it's $2.95 and it goes to $3.50, I don't think that matters. Steve, are you aware of the prices at Starbucks in any meaningful way?
No, I'm not at all. But it reminds me of a video that went viral a few weeks ago with the husband and wife going through, and they get like 3 or 4 drinks, and she's like, "It'll be $34.50," and he's like, looks over and he's like, "What did we order? I don't understand." But so like when you look at, but nobody, it's kind of funny because you don't really think about it. But sometimes you add an extra shot, or you get different flavor, you ask for something specific, and you end up with a $6 drink or whatever. And it's pretty funny, but you don't really think twice about it because, hey, you're getting your Starbucks fix in many cases. So.
I also think it's not out of line with other coffee houses. My mother was here last week, and I took my mother and son multiple days to Johan's Joe, a wonderful Swedish coffee place here in West Palm Beach. If you happen to be visiting, I'll buy you a cup of coffee there. That goes for any of you watching as well. I am easy to get a hold of. And I was spending like $40 for the three of us to get a breakfast sandwich, a bagel for my son, and 3 different drinks. Starbucks, because it's usually just me and my son, it never feels like that. The fact that it's also automated, I'm making digital transactions. I'm also getting gift cards pretty often. That's the lazy gift to get me. So I actually think, the price of beans going up, which is actually pretty irrelevant to the sale price of a cup of coffee at Starbucks. If they raise prices a quarter, 50 cents, even 75 cents on certain Frappuccinos, right, I just don't think it's all that important. I think these numbers are great. I think Starbucks is the one company you don't really have to worry about China. All the China sanctions are on things like financial transactions and how money is handled. I don't think they're likely to crack down. We are going to move in a second to Anirban Mahante on Tesla. I haven't read this comment, but I am going to take Mike Fee's comment because I trust Mike. He's a regular viewer. I'm going to assume it is a great comment. Prove me right, Mike Fee. Locking in coffee prices is nice, but what about going forward? I'd be curious, as Starbucks is negotiating now at the 50% higher spot rates for 2022. Hopefully the Brazil frost is a one-time event. Starbucks controls a lot of the supply chain. So yes, this is likely a one-time event. It's not likely to happen again, but Starbucks is also almost certainly doing things to hedge against that. They are, one, probably pushing other beverages, which they do from time to time. They make they put out a new wacky, passion fruit drink or whatever, something that's very pretty, like when Pink Drink was very popular. They have a lot of ways to hedge this. They can also work with suppliers to simply plant more land or to control more of the crop. When you have the buying power that they do, you can't move quickly. This is a lot like we've talked about on shows that say like Buffalo Wild Wings has a trouble with chicken prices because chickens take, a few months to hatch and grow to maturity. So you can adjust in relatively real time. The same thing with coffee. You can't instantly grow coffee, but you can grow coffee. We're going to close out this segment with the second comment, the nice, thankful one from Daniel Delgado, and we'll get to his first comment later in the show. Your podcasts and shows every week are amazing. I love the information being delivered. We appreciate you listening. We appreciate you watching. We do this Monday, Wednesday, Friday live at noon. We are, I was about to say drop. I hate when people say drop. We're not dropping. We're releasing our podcast Tuesday and Thursday. Steve, does that come out at 3 p.m? I think the new podcast goes live.
I think so. Yeah.
And of course,
I won't correct you.
And of course, Monday through Thursday, we are trying out a new 15-minute one-topic Twitter Spaces. That's going to be Steve and Max today. Before we get to Anirban, yes, Mike Fee, the Dragon Fruit Refresher is delicious. Yeah, I like all these wacky drinks, but I tend to be purely coffee. If you are not a 7 Investing member, what are you waiting for? Go to 7investing.com/subscribe. You give us either $49 a month or $399 a year, and you get access to all of our picks. Our new picks come out the first. We also give you our most recommended from our past picks. I never remember the proper name for that. We tell you which of all the picks we've made are the ones we think
most intriguing ideas.
Most intriguing ideas. I want to call it by that other name that we don't use. We call it our most intriguing ideas. That just gives you a little bit of an entry point. We also give you not constant, but company updates on the companies we've picked and basically say, hey, look, I picked this 6 months ago. Here's a piece of news. Here's why it matters. Here's why it doesn't matter. Here's what you should be watching. So some of our recommendations that are mature companies, you might only get a few updates a year. Some of them that are emerging biotechs or developing tech companies, you might get 3 updates in a month. It varies, but it is a great deal. If you are a member, use your referral code, share it on Twitter, and make sure to tag one of us personally or at 7 Investing, because you, of course, get a free month for every person that signs up. We won't belabor it. That is 7investing.com/subscribe. Last night, I sat down with Anirban Mahante. He is in Sydney, Australia, the very locked down Sydney, Australia. They have one more month of winter there in Sydney where they're going to be locked down for one more month. But we talked Tesla earnings. I believe it's only 6 or 7 minutes. Steve and I will join you at the end. If you have questions, we've got one we want to take. If there's others you want to get in, we would love to chat with you. JT Street, here's the big test. And welcome Anirban Mahante to 7 Investing Now. We are recording this Tuesday afternoon. Tesla reported at close of market Monday. Tesla was down like 3.5% last I looked, but that is the absurdity we've been seeing in the market. Report great results, and the market goes, sure, but what about next time? So I'm going to discount that fully. And I checked like 20 minutes ago, so they could be up again now. But Anirban, why don't you hit the highlights of what Tesla reported? Because these were really good numbers.
Dan, I'm a shareholder of Tesla, and this was probably one of the best results I've seen for the company in a while. So this is probably the best results yet. Here's the deal, right? So revenue, like if you look at the total revenue, those are up like 98%. Okay, so this is a company not making a few $100 million, right? This is a company that is making nearly $12 billion in revenue in a quarter. That is up 98%. That is phenomenal. And then if you think about, how the cost cutting, how it is going and how they're managing costs, well, their gross profits were up 128%, right? So that is pretty substantial. They expanded, their gross margin substantially. The operating expenses were up significantly. Operating expenses were up, but the leverage in the business is showing. So if you have revenue growing like 100% and operating expenses growing 65% or 67%, then you get some operating leverage in a business. That shows up in the operating margin, which went up to 11%. And if you compare that with the prior year's, same quarter 2, 2020, that's a full 5% or 555 basis points up. That is pretty phenomenal. Here's the big deal. I guess the bottom line number, right? The net income number was on a non-GAAP basis was $1.6 billion. Okay, on a GAAP basis is $1.1 billion. And for all the bears out there who love to take out the credit, you can take out the credit and it's still profitable.
So that's actually where I was going to go. That's why I raised my hand a second ago to talk, because I've been one of those people that points out how they've smoke and mirrored profits a couple of times with these credits, but the credits were only 3.5%, about 350 million on 10.21 billion. That's kind of what it should be. And let me ask the question, is this an anomaly of a quarter, or is it a tipping point with efficiency and profit margin? We'll talk about chip shortages and other things later, but is this a tipping point?
Well, here's the thing I would say. Okay, so it's tipping point in the sense that the business has hit scale. I have been a long-term bull of this company, and I think the thing that people have ignored for a long time is the operating profit. So if you look at the adjusted EBITDA, this is a company that's investing in growth, right? They're putting in money to build new factories. They're putting in money to build new machines like casting machines. They're putting in money to build new robotics. So if you look at the adjusted EBITDA number, that was up 106%, and the adjusted EBITDA for the quarter was $2.5 billion. So on an operating profit basis, this company made $2.5 billion. That is pretty phenomenal. Its trailing operating profit over the last 12 months is about $8 billion. So this is an $8 billion profit company that is growing its profit at 100%, right? That is pretty phenomenal at the scale. And here's the thing, I think on the call, I think I'll point this out. And this is actually a statement made by one of the biggest bears of this company. And he used to say there's no company, there has been never a complex manufacturing company that has grown at this scale. Or actually, it was said many years ago. But what Elon Musk was saying in the call is that there hasn't been one company that has grown at the scale that they are growing, a complex manufacturing company. That's pretty phenomenal. That speaks highly of some of the tailwinds they have. So, I feel, the stock is down. It doesn't really matter. think the stock is starting to look actually very attractive. But
Yeah, short-term movements of any stock right now, we're coming up against general negative market sentiment today, but I think we do have this very strange phenomenon of the better your numbers are, there's almost like a pushback of like, well, that can't be real. But let me ask a question. The number that impressed me the most here was almost $1 billion in service revenue. I think it was $951 million. This is going to be a massive growth area. Do you think this could be like an Apple, where it's just sort of like something they didn't focus on at first that eventually becomes a massive profit driver for the company?
so my understanding of Tesla is sort of the service revenue is they try to run that. It looks like it was a profit this quarter, but I think they try to run that as near break even as possible. So this is not a company that makes money on service as such, right? Now that accounts for other things. Like if there's providing you a service of software, then they count that there too. I don't know. I think managing that well is a good sign. I don't think that's going to be a profit machine in my view. I think what I think actually is interesting is that they talked about opening up the superchargers to the wider EVs. I think that's a very clever move, right? I think it's extremely clever.
Do other EVs have like the right fitting? Because like I don't have a lot of experience with superchargers, but I've seen them. And right at our condo complex, at our resort place, there's a Tesla and there's the other one. The other one's generally used for golf carts, but it also does power other electric cars. They don't seem to be the same like plug. Like, is that interchangeable? Or are there adapters for that?
Yeah, so there was some references to another company I really like, Apple, in terms of adapters and things like that. So what they're saying is either they're going to make adapters widely available, and I think the adapter issue is really it's only relevant to North America, because the adapter that Tesla uses in North America is actually different from the adapter, for example, I have got on my car. So there's no adapter issue, I believe, ex North America. So they might make the adapters available, they might sell those adapters. But I think the key thing is that what they're saying is they'll open up the superchargers. It's going to be based on the Tesla app, which means you might be a GM EV owner or a Ford EV owner, but you use the Tesla app to use their superchargers. I think that's very clever. That's a clever way of telling people, okay, look at how good our things are. Just come and check it out.
That would be a massive acceleration for electric vehicles in the US. There is a ton of Tesla charging, not a ton. Now we're starting to see it. Florida Turnpike, which is a sort of alternative to the highway, has charging stations for both Tesla and other, but Tesla is dominant. That's anecdotal. I want to close out here with the parts shortage. So this is not unique to Tesla, but I actually think Tesla did an incredible job compared to other companies. Ford is slowing down F-150 production. Tesla sort of like pieced it together. And Irban, at your best 10,000-foot guess, how did they do this when no one else has been able to?
Yeah, this is something they talked about in the code. So they redesigned, they changed the chips. And it's, what's fascinating is you can change the chips you're using. Well, you need to rewrite the software or the firmware that runs the chip. So their engineering team basically did they did 16 or 18 rewrites to actually produce vehicles. So this is a company that thinks on its feet. It's really, really impressive. Because they're not commoditized. They can change things. So yeah, so they talked about this, and Elon was very thankful about what the engineering team does. I'll add one more thing. Elon might not be on future earnings calls.
Oh, I was going to ask you about that one. That was
I thought you were not going to ask me about that.
Parting shot. I actually think this is brilliant. Why put a guy who could put his foot in his mouth in front of a bunch of reporters? And he hasn't really done that during the earnings call, but let's call him a wild card when it comes to speaking out loud. This seems to me like it's a power play. He's pulling a Steve Jobs. The CEO of Costco doesn't go to their earnings calls. It's not uncommon, but to me, this is actually really smart.
I agree. So Zach Kirkhorn, who is the CFO, he's very articulate, and he doesn't ramble. Like Elon Musk loves to ramble, and he goes on these tangents, and he almost sometimes explains things in a way that other people might think that condescending. He tries to explain again and again and again, but that's just how he does things. I think it's a net positive. In the owner of the quarter, if you look at my cup, a friend of mine had given me this cup. It says, I'm taking Tesla private at $4.20, funding secured. So I have this cup whenever, Tesla has its earnings report. I have my coffee in this mug.
That I, of course, am drinking out of a Quickster cup. No, that is not the case. Anirban, thank you for joining us today on 7 Investing Now. We will see you live on the program. Well, perhaps not live, perhaps recorded on the program, maybe live next week. Thank you for joining us. Back to me. 2 Quickster references in the same episode. Steve, I'm going to throw this out to the 7 Investing audience before I let you answer. What was my background during that? I still had my green screen up because I had taped my marketing video, and I picked what I considered a pretty fun background. If any of you know where I was, share that in the questions and in the comments. But I want to take Daniel Delgado's comment about Apple, Microsoft, and Tesla because I think it's a really good one. Apple, Microsoft, and Tesla all have supply constraints. And Apple had a blockbuster quarter. They've actually had 3 in a row with supply constraints. And the market still takes Apple down. Tesla is up. Why? They have a chip problem too. They did a really good job managing their chip problem. Apple had the last third, meaning the last 3 quarters as blockbusters. Shareholders aren't being rewarded. So Steve, I actually looked this up. Over the past year, Apple shares are actually up roughly 50%. So yep. I think what happens is we see in the short term, great numbers, it went down. And I always liken it to, it's like a second quarter score in a basketball game. It just doesn't mean that much. Like, I don't care who you're watching. Yeah. Like, look, we knew Iran wasn't going to come back against the US last night. I don't even think they had 5 players. That's how bad that game was. But if it's like an NBA Finals game, 10 points, 15 points, 20 points doesn't matter. I don't think daily moves matter. And Apple has been heading in the right direction. Your thoughts here?
Yeah, no, I mean, you look at, Apple, Microsoft, and Tesla. Tesla's up 120% over the last year. Microsoft's up like 40%, I think, and Apple's up like 55% over the last year. A 0.2% plus or minus move or a 1.2% decline in a single day, it doesn't matter. I've gotten emails like that, like, oh, I bought this recommendation and it's down 1.2% in the last 10 days. What should I do? Nothing. Like that's kind of how how you should think about these things. We're used to seeing much bigger swings in the very near term from a lot of the stocks that we buy. And what really matters is that eventually the stock price reflects the state of the business and the progress of the business over long periods of time. So, and we're thinking multi-year periods. 3 years is what we typically do when we buy them, because it becomes easier to kind of predict what's going to happen from a reasonable valuation base.
Great comment from Ravi Shah, a friend of the program. Ravi says, traders taking profits, nothing much. I do think that's part of it, but I do think the reality is there are people who look to overthink the news. So you could have the greatest news ever. Like, Steve, you go to your doctor's like, wow, you lost 20 pounds. You're somehow 3 inches taller. Your heart's in great condition. But hey, you've got a mole I want to take a look at in 6 months because it looks a little suspicious. And worst case scenario is I have to laser it off, nothing big. And you go home to your wife, you're like, I have a suspicious mole. That is kind of how people tend to look at results. They find the one negative of very minor news. And all of these companies we talked about today basically warned about either supply chain, pricing. We didn't talk about labor, but labor is a factor, certainly with Starbucks. And things that will be temporary. And you're going to see daily market movement on temporary news. But here's the reality. If you knew which piece of news was going to send a stock up or down, you'd probably be a really good trader. The reality is the same piece of news set Tesla up that set Apple down. It doesn't make that much sense. As we look to close out here, we appreciate so many of you playing along. Please tell your friends. We do this Monday, Wednesday, and Friday live at noon. We, of course, are also doing our very special market-focused spaces on Twitter Monday through Thursday at 4. You're going to get a whole rotating cast of 7 investing advisors there. Why don't we hit our finisher? I am hoping Sam Bailey has handed that to you, JT Street. There we go. How do you feel about investing in Chinese companies? A lot of people got mad that I didn't give buy as an option. Not right now, 25.9%. Holding 38.7%, sold 10.2%, never did it anyways 25.2%. I am largely in the never did it anyways, though I do own Starbucks and I certainly own companies with Chinese exposure. Disney has some Chinese exposure. Microsoft has some Chinese exposure. Steve, where do you fall on this spectrum? We are having a little bit of a glitch with Steve here. I see Steve. He's gone a little bit fuzzy, and I don't
kind of lost
hear
you
him.
there, Dan.
I think that's on your end, Steve, but where do you fall on this spectrum?
I lost you for a moment there.
And I hope, JT, let me know if I am still live. If I am still live, why don't we share Ravi Shah's second comment here? If it is not the case, yep, nope, Steve is still live. So yeah, give me Ravi Shah's second comment and I'll work on closing out. We'll bring Steve back if we can. I love the examples that Dan shares, so relatable. Yeah, I am a little silly sometimes, gets me in trouble occasionally, but I try to pick things that are fun. NF Tureen is next. We will take that comment. What is your advice to avoid being impacted by short-term noise? Tune it out. It doesn't matter. Good companies win in the long run. You don't really have to think about it. So it doesn't look like we're going to get Steve back. So let me close out on the finisher here. We have Steve back. Let me say that I would not buy Chinese companies right now, especially ones that have anything to do with finance, anything to do with moving money around, because I do think the Chinese government is pulling a pretty big flex here. You appear to be back in the picture here, Steve. Why don't you close out with your thoughts there?
Yeah, and assuming we're still on Chinese companies, I lost my internet connection just for a moment there. I was in the I was technically in the sold category because I had a the only Chinese company I had in my portfolio was a very small position in JD.com, and it was up pretty significantly, and even then it was still a very, very small part of my portfolio. And I said, you know what, I don't want to have to worry about this right now, and I have better places to put my money, and I sold that small position. I might step back in with some of the bigger ones later on, but for now, I guess I would say I was in the sold camp and the not right now camp for me, because I think there's lots of other great places to put your money to work.
For me, the fact that there's political pressure both from China and from the US, and I don't really understand the Chinese government's motives, and I feel like I could understand the US government, to me, it makes it a non-invest. And it's not because there aren't some great companies. It's because there are better companies, and there are better companies whose businesses I understand better. Doesn't mean it isn't right for you. Doesn't mean we haven't or won't recommend a Chinese company. I actually don't remember that answer. We may have. And if you're a member, you could find out. Or if you're a member and you want to not even look, just email us at info@7investing.com. No, don't do that. You can email us at info@7investing.com for questions about your membership, questions about how our site works. Maybe you're unclear about how to do something. We are happy to take those. That is Steve most of the time. If you'd like to interact with us on Twitter, we are at 7investing. That is at the number 7investing. If you go there now, you will see the link to our spaces later today. And that space is live at 4, but you can hit a button there to remind you when it goes live. We would love to see everybody blowing out our spaces at 4 o'clock. It is a fun one topic, 15 minutes, a little different from this show. The best part of this show, as always, is all of you. So many people asked questions. So many people had comments. We're going to be back on Friday with Simon Erickson and Matt Cochran. We've got a really interesting show. We're going to talk a little bit of Intel and whether they can come back. That's, of course, subject to change. All cards are subject to change, as they say in the pro wrestling world. For that, our sympathy goes out. Sam Bailey, feel better. It is nothing serious, just a cold she's dealing with. But we all know that after a year of being masked, dealing with a cold is not fun. So please feel better. JT Street, thank you for all your last minute help today. It was fun. Steve Symington, Dan Klein, I will see you on Friday. Steve will see you at 4 o'clock on Spaces. Thank you, everybody.